On the surface, almost nothing happened today. The S&P moved less than 0.1%, drew a range of just 30 points from its high to its low, and went home 4 points lighter at 77.53, turned away from the all-time high for a third afternoon running. This is the Algo Index market close for Monday, the 10th of August. Now, drop one layer beneath that still surface, because the layer beneath it does not agree. The fear gauge refused to sit quiet with the index. It jumped nearly 4% to 15.5 on a session the market barely twitched in. And that split, a frozen index above and a rising measure of fear below, is the entire story of the day. Because a sudden climb in crude oil put inflation back onto the board, exactly 2 sessions before the report that decides it. Here is the countdown of what pulls that split apart. 3. The $4 billion of options flow that reads like activity, but was almost entirely one same-day trade repeated, and what it says about a market holding its breath. 2. The real 5-minute session. One clean push, one headline that snapped it, and the price the market bent around anyway. 1. The single loudest bet of the day, and it was not in stocks at all. Then the desk card and the map into Wednesday. Start with the board and the disagreement built into it. The S&P closed at 77.53, lower by 0.06%, a rounding error of a day, while the Nasdaq 100 gave back about 0.33% as its chip leaders slipped. The whole high-to-low span was under 0.4%, and against that flat print, the fear gauge pushed higher by close to 4%, up to 15.5, with its companion measure of longer horizon swings adding 2% to 92.5. Put the option prices next to it, and the picture sharpens. 1-month implied volatility sits near the 13th percentile of its own year. Cheap by any yardstick, and yet buyers paid up for it today. The reading to hold from this board is that stillness on the screen and unease in the option market arrive together, which almost never happens by accident. Now, the part that never showed on your screen, and it is the reason the day felt heavier than a 4-point loss should. Our real-time read of dealer hedging finished the session $4 billion net negative, and nearly every dollar of it was same-day call selling. Single stock hedging came out flat. Strip the jargon off that, and it says one thing plainly. The professional money spent the day harvesting premium on options that expire tonight and would not commit a cent to anything dated further out. They are waiting for Wednesday, and they are telling you so with their order flow. Underneath the flow, 2 quieter tells point the same way. The cost of fixed strike protection actually rose today, between 1.5 and 5 volatility points, which is buyers reaching for cover, even as the index stood still. And the shape of the option market has gone lopsided. Demand for upside calls now sits at the top of its 3-month range, while demand for downside puts sits at the bottom. Traders threw away their hedges over the past 2 weeks to chase the record, and today, a few of them started quietly buying the cheapest ones back. So what actually moved price? A little past midday, a run of oil headlines crossed at once, supply threats abroad and a fresh demand for compensation aimed at Iran, and crude jumped about 5%. Higher oil feeds straight into the inflation worry, so yields ticked up toward 4 7/10, and the index rolled over. Energy led the market, up more than 4.5%, and with more stocks rising than falling, this was money rotating toward oil and metals, not money leaving. Give me a minute on the chart, because the 5-minute session behaved with more discipline than a 4-point loss lets on. Price opened at 77.52 and climbed, grinding without drama, up to the day's high of 77.74, just before 11 in the morning. Mark that high, because it stalled about 20 points shy of the record at 77.93. The same overhead wall the market has now failed at 3 sessions in a row. Then, around 12:45, the oil headlines hit, and the morning grind broke in a single move, price flushing straight down to the day's low of 77.43. That low is the tell worth keeping. It stopped right at the first computed support near 77.40, and it sat directly on top of the shelf where dealer short puts run from 7,700 up to 77.50, the zone where their hedging buys the dip. Buyers stepped in there and lifted price back to the pin at 77.50. The clean map into Wednesday is short. 77.50 is the center of gravity and the pin. 7,700 is the support beneath it. 7,800 is the ceiling above. and 77.93 is the record standing between price and any breakout. The loudest one-directional bet of the day was not in the S&P, it was in gold. On a session where index players sold same-day premium and committed to nothing, the money in metals did the opposite. It pressed. The gold fund cleared the 400 level that had been acting as its options ceiling. Its option skew flipped to favor calls for the first time since the middle of last week, and it closed up about 1%, while the metal itself settled near 44.20. The through line is worth saying out loud. When traders smell easier policy coming, and a crude-driven inflation scare only sharpens the case for it, the fastest conviction does not chase a stalled index. It buys the metal that moves first, and today it did exactly that, while the S&P sat on its hands. The desk read the day for what it was and took its money early. All 4 of our trend session tests failed before 10 in the morning, which flags a range day, so we worked the morning grind, rather than reaching for a breakout that the record ceiling was never going to allow. 3 trades, 3 winners. All of them closed between 10:10 and 10:32, while price was still working higher. And then we stepped aside. When the oil headlines snapped the session at midday, the book was already flat and stayed flat into the close. Nothing heroic in it. Just a quiet green day booked before the afternoon got messy. 3 small wins and no losses, and the discipline to not give them back. Let me grade our own last call before I set up the next one, because we say these out loud. Friday from this seat, we called it constructive, but told you not to chase the record. Medium conviction, with the risk pivot near 76.80 as the line that would end it. Here is how that aged. The market did essentially nothing today. It held well above that pivot. It refused the record a third time, and it respected the 7,700 support and the 7,800 ceiling almost to the point. The read held. What we described as a coil did not resolve. It wound tighter. One question today leaves wide open. A flat inside day, 2 sessions before the most important number of the month, is a market waiting, not a market deciding. And the dealer positioning cuts both ways. Supportive positioning below price that buys the dips, and unusual negative positioning above 7,800 that could turn a clean break into a fast run. That is a setup that can fire in either direction on Wednesday, and anyone who tells you which way tonight is guessing. So the map. Tuesday is close to empty on the calendar. A housing number in the morning, and a large chipmaker reporting after the close. So expect more of the same drift, with the pins at 77.25 and 7,700, tugging gently lower. Then Wednesday morning the consumer inflation report lands, headline expected near 3 4/10, and it is the release that unlocks the coil. Above 7,800 the upside can accelerate. Below 76.80, the whole constructive read comes off. And if you intend to trade that number, the one gift on offer tonight is that the protection to trade it with 2 links and 1 room before I let you go. The Algo Index Trading Journal is open to anyone at no cost over at members.algoindex.com/auth/signup. And every setup you log there is scored against the very price on your screen the moment you committed to it. How well these dealer levels actually behaved, held, or broke stays out in the open at algoindex.com/tools/gamma level accuracy. Tonight's full written version is posted at algoindex.com/blog. And the traders who talk through every one of these calls in real time are gathered on Discord. Rest up, keep Wednesday's inflation print circled, and I will be right back here tomorrow night.